Hey guys, I'm Danny. This is Capital Cosm, and I have a question for you. What happens when oil producers across the world stop asking for USDs as a form of payment for oil? And I'll actually raise you one better. What happens when they start asking for oil in gold? That's exactly what we're going to be looking at today, and the ramifications that stem from that. And they're huge, they're monumental, and yes, it is a very real possibility. We'll take a look at that and a few other things here on Twitter. Before we start, standard disclaimer, this is not financial advice. Everything in this video is for educational purposes only. Please do your own due diligence. Okay, first tweet we're going to look at, this is from Luke Groman. He says, this is in reference to his interview with Wealthion. He says, I suggest settling oil in gold is inevitable due to peak cheap oil and sovereign debt bubble. Why? Well, he has two charts here. So the left chart is how many barrels of oil an ounce of gold can buy since the 1870s. So let's take a look at this. So it looks like we can buy about 20 barrels of oil per ounce of gold as of today. Now, if you trace this all the way back to, let's say, the beginning of the 20th century, it's pretty much around that range. I mean, sure, we have anomalies every now and then, these wild peaks where oil went down to, close, to zero. But for the most part, oil to gold has actually maintained its level. Gold as a form of payment has actually maintained its level. You can buy about as many barrels of oil today as you could, let's say, somewhere in the 1920s. So this is a major incentive for oil producers to actually go through with it and start accepting an asset like gold that is shown to hold its value, retain its value, as opposed to paper fiat currencies like the USD, which we'll see in the next chart. As Luke says here, on the right chart is how many barrels of oil one UST, so it's essentially $1,000 face value, has bought since the 1970s. And you can clearly see this downtrend. $1,000 can't buy you as many barrels of oil as it could, let's say in the 80s, all the way out here. The more time, the time that you allow these USTs to mature, the less barrels of oil you're likely going to be able to buy in the future. So these are two tailwinds behind gold and gold as a form of payment for oil. There's also another really good point here to be made, and it has to do with Standard Oil and the fact that they actually had a deal with Saudi Arabia a few years back. So it says here, this is from the former chairman of Standard Oil of California. He says, we made an agreement with King Ibn Saud that we would give him gold for every ton of oil we took out of his country. We would give him gold. And we did at first. Then we got producing more and more and more. And try to find gold shillings to meet the requirements so we could ship another ton. And finally, we had to tell him that we couldn't find that much gold. There wasn't that much gold. We had now such an enormous business that we cleaned the world of gold shilling. So just from this one agreement, the supply of gold, the stock of gold throughout the entire world wasn't enough to meet the demand of Standard Oil, in this case, to Saudi Arabia. So the deal, had to be scrapped just because of logistic matters. So what happens when, not just one party, not just two parties run an agreement like this, but then you have the entire world asking for payments in gold for their oil. Ghana being one of the first countries to actually do this recently in the past few weeks. Let's look at few other charts here as well. I'm just going to scroll up. So here I say this is crude oil price in either gold or silver. And then we also have crude oil priced in the British pound, the USD, and the euro. And let's take a look at this chart. So this goes all the way back to the 1950s. And gold here in yellow and silver here in gray have pretty much chopped sideways, meaning that you could essentially buy the same amount of barrels of oil that you could, all the way back in the 1950s. Again, gold and silver, these precious metals, have pretty much retained their value throughout time. Whereas the fiat currencies, the British pound, the USD, and the euro, it takes a lot more. It takes a lot more of these currency units to actually buy a barrel of oil today versus the 1950s. You can clearly see the uptrend on these currencies. So, again, if you're an oil producer and you're in the same world as we are, that is an inflating world where countries have debased their currencies and they're losing value at rapid pace, do you really want to take payment in fiat currency that's expected to have a decay on it? Or would you rather have your oil tied to something like gold or silver that's been historically shown to keep its value relative to the oil price? And what happens when we cease buying oil with USDs? Think about this. And we being the world, let's say. Well, think about the fact that 70%, I believe it's 60 or 70%, 60 to 70% of all US dollars in circulation are outside of the United States. And one of the reasons that is because the world currently, if you're Brazil, let's say, and you're India, if you want to buy oil, if India wants to buy oil from Brazil did produce oil, that is, India has to buy dollars and give to Brazil to buy Brazil's oil. Now, if producers break away from this system, then all of these dollars, again, it's 60 to 70% of all US dollars are outside of the US. All of those dollars have less of an incentive to be outside of the system. So they're going to flood back into the US. Now, not all of them, but a significant chunk of them will flood back into the United States. So once we start seeing those dollars back within the borders of the United States domestically, what do you think that's going to do? What do you think that's going to do to our goods and services? Once we have more dollars within our borders chasing the same amount of goods and services within our borders, it's going to raise the price of the goods and services way up. So that is the ramification of this kind of trading mechanism between oil and gold. So this is something that's very significant. And let's go up and see what else we kind of have to back this up. This is from Tavi Costa. And here he writes, probably one of the most important new secular thesis in global macro today is that gold is in the early stages of becoming the preferred asset among central banks, looking to improve the quality of their international reserves. Very bullish for the metal. Let's take a look at what Tavi has here. And it's basically this bottom chart, everything in the green represents a net volume of gold purchases done by central banks. So everything from about, let's say, 2010 onward, central banks have bought more gold than they've sold more. They've bought more gold than they've sold gold, resulting in a net volume of gold. You can see the record amount of purchases done by these central banks, and it's more than it's ever been done in history. You go back to the 1970s, and the reason why the 1970s is so important is because 1971 is when Nixon cut us off from the gold standard. So, central banks appear to be positioning themselves for something. Is it a global currency reset? Maybe. Probably. Here's another chart right above it. This is the gold holdings as a percentage of foreign reserves across global central banks. And over the last couple decades, we've formed this long-term base. It looks like we've bottomed out. And we're starting to break out. We're starting to move back up. Now, are we going to get back to this 74% number? There was a time when, according to this chart, 74% of foreign reserve assets were in gold holdings. Are we going to get back to that place? I don't know. We'll see. But we are buying, or not we, but the central banks across the globe are buying gold in record amounts. So, what do they know that the general public doesn't know? What are they getting ready for? Every time we see a global currency reset, the central banks hoard up on gold because the new reserve currency that emerges from those resets tends to be backed by gold. If we go all the way back to Bretton Woods, the USD was named the world reserve currency and still is today. But at that time, $1 was as good as gold, was redeemable in gold. And that lasted for all the way up until 1971. But the fact is that the central banks had to have gold holdings in reserve because of that. And one more thing. So this is really interesting. So this is from WinSmart CFA. And basically what he's done here, he's taken the price of gold historically, and he's looked at it from the lens that we look at it today. So this is just the raw price of gold, sitting at about 1,800, somewhere around here. We're still a bit of ways from our all-time high. And then he applied the pre-1980 CPI method. So before the 1980s, we used to use a different methodology in calculating CPI, Consumer Price Index. And the way that we calculate CPI today, using today's methodology, significantly underreports the CPI by about a factor of 2 compared to the pre-1980s method. Now, if you use the pre-1980s method in calculating CPI, you have, with the current price of gold as the base price, so it's 1,800, that means that the all-time high price of gold adjusted for inflation using the pre-1980 CPI method comes out to about 20,000. Now, is that something that's realistic? I actually think so. And especially if we go back to a world where gold becomes the money of the land. When producers start accepting gold as a form of payment. And not just start accepting it, but require it as a form of payment. Let me know what you guys think. Very curious to get your thoughts on this. Leave me a comment below if you think that gold will reach these levels again. Are we going back to 20,000? Once the dust clears, and is it going to be because oil producers start accepting payment in gold and we basically do away with the petrodollar, or is it because of some other reason? Let me know in the comments below. Give me a like if you like this video. Give me a dislike if you didn't. And go ahead and subscribe to the channel. It really helps me when you guys do this. It gives me an added boost in the algorithms to make it to help me in pushing out this message to a broader and broader audience. So that's all I got today. Thanks, guys. Until next time. Bye.